What's up, guys? Welcome to another video. All right. So, making it a little bit fun here, but there's a couple things I want to talk about, right? You know, or actually just one thing I want to talk about in this video. I'll save the rest for another video, but just about the whole GameStop thing and why I think that we're on the cusp of an extension of this bull market, right? I mean, this market's been crazy and wild. Everyone's thinking we're going to crash soon, but I think this whole GameStop thing kind of fueled that fire, and here's why. So, I got everything on fire here. Everyone thinks that things are going to crash, but I don't think so. Not yet. We're not there yet. So what I'm going to do is share my screen. Here we go. All right. So I got the SPY up here. I'm using Webull for my chart here because it's a lot less taxing than TD Ameritrade. So otherwise, I'll be showing the ES futures. They don't show the ES futures on this platform. All right, so I have a thesis here and just some things I've been seeing and kind of just compiling information and just tidbits here and there and just seeing how all this is playing out, right? With the whole GameStop debacle, right? It's pretty wild, right? Under the surface, I don't know exactly what's going on, obviously, but I have some theories, right? And first off, I want to say this game is rigged, right? It's rigged against you, especially if you don't have a lot of capital. The more capital you get, the more you level up in your trading, right? You get perks. You get more perks and more advantages. Not only on like a mentality aspect, but an actual trading. Like, say if you have an account over 150 grand, some brokerages offer portfolio margin, which gives you a lot more, which allows a lot less margin requirements to trade, which in turn allows you to trade with more capital than you would with someone that's using, say, a $50,000 account, right? You have a lot more capital freed up. So a lot more capital freed up means more opportunities to take part in, right? With a larger amount of capital. But yeah, it's just this game is, this game, it's a game, right? It's a game that favors people with the most capital. So, if you think it's fair or anything, it's fair in the sense that, if you don't follow your risk, if you don't have strict risk management, then yeah, it is fair. If you don't follow it, it's going to hurt you. But if you do, you'll keep the pain small, right? So that's very important. Those are the things you can control. But anyways, going back to this, right? So we had this whole GameStop squeeze. I'm gonna go to the GameStop stock here, right? I mean, it's fucking crazy, right? This huge squeeze. The whole thing was, the people against the hedge funds and whatnot, right? Well, I think if this would have kept going, I think we would have probably saw a market crash, right? If GameStop would have hit like $1,000, $2,000, right? You probably would have saw a market crash, right? And it's just funny because, or it's not funny, but it's pretty interesting because, during this time here this is the SPY chart here. You could just kind of see how the market was selling off during that time, right? During the squeeze around that time. After the squeeze, after the stock crashed, look, climb right back up, right? So what happened here is that a lot of institutional, say a lot of the funds that were short, just short GameStop, or even probably there were like new requirements, tighter requirements, capital requirements across the board, which forced selling, right? Which forced the large institutional funds to start selling stock, right? It's saying stock in like big tech companies like Facebook, Amazon, Apple, right? They're selling these shares, they're selling these positions to meet capital requirements, right? Not particularly for GameStop, but just across the board, right? I think this GameStop thing was causing a little bit of a scare, right? And they were imposing these capital requirements to just mitigate risk, right? In case there was a blow up, right? These they didn't want something to like maybe cause a chain reaction, right? Or a huge market crash. Who knows, right? Who knows what went on behind the scenes? So this is pretty interesting. So you had this huge market sell off, right? Not only that, you have these hedge funds and institutions selling off, right? But they've been, throughout this whole bull market since March last year, they've been undercapitalized or underexposed. Sorry, they have a lot of capital on the sidelines. There's a lot of capital on the sidelines. No one thought we would see new all-time highs. Now we're kind of like now people are in kind of in a chase mode, right? These funds have to perform, right? You put out your monthly, quarterly, or yearly report, and if you're underperforming in the greatest bull market of all time, you might as well shut your doors, right? Investors would take their money and go elsewhere, right? So you have to start chasing, and that's a problem, right? That's a problem for them. So, well, it's good for the bull market, right? So going back to GameStop, right? When this thing sold off, it kind of eased that risk, right? That risk of some sort of market crash, right? It just would have been bad for the market, right? If you had stuff happening like this, and if it would have went to $1,000 or 2,000 and stayed there, and all these Wall Street bet people got rich, and people getting rich across the board, right? There's consequences, right? The money's got to come from somewhere, right? And that would be large institutional funds blowing up, selling off stock. Probably the whole market would have crashed. GameStop would have been up. It would have just been crazy, right? To think about this. So in a way, I mean, I'm not for Wall Street, but what they did to just kind of to suppress this, in a way that got them, it just, the way you put pieces together, it kind of feels like they weaseled, their way into it, went through loopholes to find a way to stop this, right? Because it is market manipulation, right? In a way, but they did it in a legal way, right? A legal way, not illegal. So it's just very interesting, right? So I just can't fathom what would have happened if this continued on, and they couldn't let it continue on, right? So that's why I say this game is rigged, right? Because stuff like this happens, and when you have millions of people just banding together to buy and support one stock that's heavily shorted, that's over shorted, like what, it was over 140% of the shares were short. You get this crazy move, and nobody would have thought this would have happened, right? So this ties things into crypto, right? I don't want to just go here and touch on crypto a little bit. with trading, right? With trading stocks, just we'll start at the PDT rule, pattern day trade. When you're trading with under $25,000 in capital, you're not. It's not because the brokerages want to protect you. Hell no. It's not to protect you at all. It's to protect them, right? Because trading, right? When you trade and when you buy and sell a stock, it takes 2 days for stocks to clear, right? It takes 2 days for the trades to clear. Now, if this allows time for the brokerage to make sure the trade clears, there's capital available, right, to meet their margin requirements, or whatever, right? I don't know exactly how it works in the background, but that's the gist of it, right? They have to give time for it to clear. Now, in this day and age, that shouldn't even be a thing, right? If so, now after this whole deal, this whole GameStop deal, they need to find a way to get trades to clear either same day or at least 1 day, right? Not 2 days, right? When we get to a point, it's gonna happen, right? But when we get to a point where they start using blockchain to clear trades in real time, you won't need the pattern day trade rule anymore. It won't be existing anymore. It would make no sense to have it, right? Because it's not there to protect you. When trades clear same day or in real time, they'll know exactly the amount of capital they need, to manage and prevent something like this from happening, right? And when I mean prevent something like this, I mean preventing these brokerages from stopping trades, like say stopping trades on GameStop or AMC, right? Where they prevented buying of these stocks and only allowed selling, because they had to make sure that they met them. If something would have happened, it's like these hedge funds would have blew up, right? Robinhood and these other brokers would have been on the hook, right? They would have to put forth the capital, so they couldn't afford that. That's pretty much the bottom line, right? They had to find a way to stop it. They did so in a legal way, right? And they made it happen, right? They suppressed it and they put water on that fire, right? Because they could have kept going. So once this is why blockchain is important, and I think in this aspect, because it will help resolve that issue. I'm gonna let the smart people figure that out, but I think crypto is going to be a big part of it, right? So, because I mean, you could trade Bitcoin, right? You could trade Bitcoin, you could trade it, you could trade with $5,000 and day trade it all day. Why on a U.S. exchange on Coinbase, right? Say you could do that on Coinbase all day. Where's the PDT, the pattern day trade rule on that? There's no pattern day trade rule in crypto, right? So just think about it. It's not to protect you, right? It's to protect the brokerages. They need to figure out a way. They could see what Coinbase is doing and then figure it out, right? So just an interesting thought there. So I have another thought. Let's see what I have here. So now, what is going to fuel this bull market going forward, right? Funds were already underexposed through all this, through this huge bull run. Let's go on the weekly chart if I can find it. Oh, down here. I'm not familiar with this. I don't trade actively on here. All right. Since the March low, right? Last year, boom, pretty much straight up. Funds are still underexposed. They need to show returns, right? And then when you have a sell-off like you did in late January during the whole GameStop debacle, right? During all this, whole market was just kind of, selling off during that whole deal. They need to buy back in. And they've been doing so. They've been buying back in, but probably not to the size that they had, or where they needed to be, right? So now they had to play even more catch up, right? They're even further behind. So I think that's going to fuel the next bull market, right? And everyone's calling for a dip, everyone's calling for things to crash, but I really don't think so. So I don't know. What do you guys think? That's pretty much my thoughts on it. If you want, just leave a comment in the description, down below, and let me know what you think. What do you think? Do you think we're gonna keep going up, and why? I just feel like we're just in the start of this bull market, and when the economy opens up, it's just gonna create it's gonna create an explosion, right? People are so pent up, sitting at home, not being restricted, wearing these masks, right? Not being able to do as much as what they used to, right? It feels like people are imprisoned, right? So when the vaccine is finally out and people are getting it on the regular and can get it easily and be vaccinated and everything is declared done, and we've squashed this problem of the pandemic, the economy is going to just boom, right? Lots, we have all these recovery stocks that are down in the shitter right now. Airlines, right? They're all going to start booming, right? Because they can only go up from where they were. So just take note of that. If you're bearish in this market, I don't think so. And if you're scared, or if you're not making money, or if you have money on the sidelines, you got to ask yourself why. Everybody, cash is cheap right now. Interest rates are low. People want their money to grow. Smart people want their money to grow. So they're going into real estate, they're going into stocks, crypto, anything other than cash, right? If you have most of your money in cash in a bank, you might as well light 2 to 3% of it on fire every single year, because you're losing to inflation. You need to park it into something that appreciates. Just park it into an S&P fund and leave it. If you're not a trader, if you don't want too much risk, diversify stocks, broad market ETFs, go into real estate if you can. Real estate market's pretty crazy. So, I mean, anywhere you can put your money other than a bank. So that's what you need to do. This is not financial advice. I'm not a financial advisor, so don't listen to some dude on the internet, with a background like this and with sunglasses, right? But I'm just being serious. This is probably one of the greatest bull markets in history. It is the greatest bull market in history, right? It's already proven. And I think we got further to go. You have stocks, you have crypto, you got everything firing on all cylinders. And the Fed has already stated that they're going to keep printing and keep rates low for at least the next couple of years. So you have at least another couple of years to profit and to make some money off of this. So just be a shame if you're on the sidelines and you're in all cash, or if you're a bear and expecting a market crash because, we shouldn't be up this high and whatnot. Yes, there will be a crash eventually, but you're not going to time it. So might as well ride it. I always have a rule. When we hit the top, we don't know when the top's going to be, but I expect to lose about 10 to 20% of my total profits when I realize the top is in, because you'll realize when it's in. You just gotta keep an open mind and see what the market is telling you, right? It will give you time, and you can't be greedy. You have to take profits along the way, and when that top is in, you'll know, but you'll be down 10 to 20%, right, from the top. It's better to be down 10 to 20% from the max amount of profits than it is to be sitting on the sidelines and getting out. Like, say you got out right here, and then we go up to like 500-600 SPY, right? We go up 50% or 100% more from here, and you're sitting on the sidelines from here because you thought this was the top, or you thought this was the top, right? That's not how you play, because then you lose on 50%, 100% on upside, right? So I would rather lose 10 to 20% from the top than miss out on an extra 50 to 100%. That's what you got to think. A lot of people think in a short term, especially if you ride it all the way to the top and then you start losing, people have that mentality. Oh my God, I'm losing money now. Well, you did make a shit ton of money over the past couple of years, right? So, you got to put it in perspective, right? So in this game, you're never going to catch the bottoms. You're never going to buy or sell the tops, right? You got to stick with the trends. And when the trend changes, when things change, you got to be quick on your feet. That's for people that are actively trading, long-term investors. Keep buying the dip, right? Over time, over the past 100 years, we've returned over 8% on average yearly. So, there's no reason to try and time the market if you're a long-term investor. Just keep buying the dip. But if you're more active like me, just understand that you're not going to catch the top and buy the bottom. So, that's pretty much it for my video. Like and subscribe. Appreciate the support. Thank you.